Welcome to the webinar called Following Up with Customers at Key Transition Points. In addition to the PowerPoint, you should have this document that accompanies it called Transition Points Chart 2019, which describes a variety of transition points, when they happen, why they're important, action that the individual may need to take when that transition point occurs, what the benefit to work coach should do, and whether you should refer the person to a benefit planner when that transition point occurs. This is for future reference. And back to the PowerPoint. So there are 6 learning objectives for this webinar: to be able to describe a transition point and explain why it's important to check in with an individual during transition points, to list examples of key transition points for Title II disability benefits, SSI, and medical benefits, Medicare and Medicaid, to be able to use the DB 101 benefits and work estimator to identify additional transition points and timelines for them, to summarize the kinds of assistance that you, the benefit to work coach, should provide at particular transition points, and for 3 case studies, you'll be identifying transition points, when they should occur, and what you should do to help the person for each transition point. So, as a benefit to work coach, you explain the impact of earnings and work incentives on people's benefits, especially cash benefits they get from Social Security and Medicare and Medicaid. Ideally, you'll be able to meet with the person before she or he starts the job or soon after the job begins, and the person will be able to make an informed decision about work and their earnings goal with your help. However, frequently, particularly with Title II benefits, the actual impact of work on cash and medical benefits doesn't occur for years, possibly, or at least months after work begins. So you'll need to check in with people periodically when a transition point occurs, when their earnings change, their benefit status, or their work incentive status. That will give the person information so that they can choose to continue working if that would improve their financial situation, rather than quitting work or cutting their earnings because they're afraid of losing benefits. So what is a transition point? It's an event or a point in time when either the person's benefits, their cash or medical benefits, will be impacted by their earnings, or when their work incentive status will change as a result of earnings. So some transition points can't always be accurately predicted. You may not know when a person is going to start or stop a job. Can't really predict that in advance all the time. But other transition points can be anticipated very accurately. For example, if a person uses his or her 9th and final trial work period month, then you know the very next month is the beginning of the extended period of eligibility, or EPE, and that it's 36 consecutive months, whether or not the person's working, whether or not they're earning at the SGA level. But first things first, it's always important to verify benefits. And the best way to do that, at least with Title II and often SSI benefits, Medicare, sometimes with Medicaid, is to get a BPQI. Now, if you review the BPQI and you see that there are discrepancies, it's apparent that Social Security has not reviewed a person's recent earnings or older earnings. If their work incentive status appears to be old or outdated, or if there are other errors, you want to identify the accurate information and, if necessary, speak with a benefit planner. And contact Social Security to resolve discrepancies, request work reviews if those are needed for Title II benefits, etc. So here's some examples of key transition points. We'll start with Title II benefits. Always if a person starts or stops a job or their wage amounts change, those could be key transition points depending on the amount of their earnings. When their trial work period ends, if their gross wages after the trial work period go above or below SGA, if their earnings after the trial work period are above the SGA level, then you may need to identify and document possible IRWs and subsidies that might possibly help them keep earnings below SGA. If a person's countable wages after subtracting IRWs and subsidies go above or below the SGA level after their trial work period, then there's the cessation month and the grace period. That's the first month that their countable wages go over SGA after the trial work period and the 2 consecutive months that follow it. The end of the EPE, the extended period of eligibility, which will always be 36 months after the trial work period has ended. The benefit termination month, this is when the person's benefits will not just be suspended, but will actually be terminated as a result of earnings. And it occurs once a person has done SGA after their EPE and grace period have ended. Then 5 years after the benefits have been terminated due to SGA, that's the window during which a person can request expedited reinstatement. Getting approval for a PASS, a plan to achieve self-support, and subsequent PASS reviews if a person's going to use a PASS. If a person has an overpayment or an underpayment, when they have a work review or a work continuing disability review known as a work CDR, and there's an SGA determination being conducted by Social Security. If a person on a Title II benefit becomes entitled to a different Title II benefit, for example, a person who gets a CDB, also known as DAC benefit, on a parent's earnings record, if that person continues to work for a long enough period, they may get insured status and qualify for SSDI on their own record. If somebody receiving SSDI reaches the age that would qualify them for either early retirement benefits or full retirement age, that's a transition point. A person on SSDI could file for early retirement as early as age 62, and full retirement age is currently age 66, although it will begin to creep closer to age 67 in coming years. If a person receiving CDB or DAC benefits gets married to a person who doesn't receive Title II benefits, that's a transition point because that person would become ineligible for the CDB or DAC benefit. When Social Security conducts a medical continuing disability review, or if they go through a medical continuing disability review and they're found to have medically improved, that's a key transition point. Now for SSI, some key transition points are similar, others are different. It's always a key transition point when a person starts work, stops work, or their earnings amount changes. And that's always going to be particularly the case for SSI. If a person begins to receive unearned income or stops receiving it, or the amount of their unearned income changes, that's a transition point because it can affect the amount of their SSI, just as earnings and changes in earnings can. If a person's earnings increase high enough that they would reduce the person's SSI payment to zero, this is known as the break-even point. That's a key transition point. And if their earnings fall back below the break-even point. Now, if earnings reach the 1619B threshold, which in 2019 is $36,552 a year in Michigan, that's an important transition point because then the person might no longer be eligible for 1619B. If a person on SSI either becomes a student or stops their student status, or if they reach age 22, that can affect their eligibility for the student earned income exclusion, can either enable them to be eligible if they're a student under age 22 regularly attending school or job training, they could qualify. If one of those criteria ends, they'd no longer be eligible for the student earned income exclusion. So that's a transition point. If a person incurs impairment-related work expenses or IRWs, if they start paying for them, stop paying for them, or if the expense amounts change. If a person receiving SSI has a change in vision status and they begin to meet Social Security's definition of statutory blindness, that would be a key transition point because then they could use blind work expenses or BWEs if they're working. And if a blind person is working, they will pretty certainly be incurring blind work expenses, at least taxes taken out of pay, perhaps meals at work, transportation, and others. And if those blind work expenses begin, they stop, or the amounts change, those would be key transition points. If a person submits a plan to achieve self-support or pass, or has pass reviews, if they have a benefit termination month, their SSI is actually terminated. An example would be if their earnings were above the 1619B threshold for 12 consecutive months. Now, if the person has had SSI terminated due to earnings, and then their countable earnings drop below SGA within 5 years of the benefit termination due to wages, they could be eligible for expedited reinstatement. And the deadline for expedited reinstatement is 5 years after the benefit termination month. So that'll also be a key transition point after which they'd no longer be eligible for expedited reinstatement. Of course, if the person has an overpayment or an underpayment, they have an SSI redetermination. These usually happen at least annually, evaluating changes in income, living arrangements, etc. If the person's living arrangements change, if they become entitled to a Title II benefit. For example, someone on SSI might work or continue working and get insured status and qualify for SSDI. If their countable resources get close to the resource limit of $2,000 or $3,000 for a married couple, that's a transition point and a good time to remind the person that they should either spend money or convert their resources to a form that doesn't count, such as putting money into an ABLE account so that they don't exceed the resource limit. If they get married or divorced, that could affect the total SSI benefit they could be eligible for if they're married to another SSI recipient or they divorce that person, or it could change deeming. the amount of a spouse's income and resources that count against the SSI of the spouse who receives SSI. When Social Security conducts a medical continuing disability review, or if the person is found to have medically improved during a review. And finally, key transition points for Medicare and Medicaid. One would be the end of the extended period of Medicare coverage. This is when someone gets to keep Medicare even though their Title II benefit has been reduced to zero due to earnings. Lets them keep their Medicare without having to pay anything extra for it for at least 93 months, 7 years and 9 months after the trial work period ends. If the person gets Medicaid, then their countable income and resources might go above the limit for the type of Medicaid they're getting. Or the same might happen for a Medicare savings program they're enrolled in. It's certainly a key transition point when a person might benefit from applying for freedom to work to get their Medicaid. Now, you can use the DB 101 Benefits and Work Estimator to check the transition points that you've identified and possibly discover others. If you go into the Benefits and Work Estimator and complete a session for a person, when you get to the results summary page, you can click on the timeline near the top of the page, and the timeline will list some key transition points and time frames for them. And here's what the timeline looks like. And you can see in this example, it's showing trial work months, the extended period of eligibility beginning and ending, and there may be others as well, depending on the person's circumstances. So what should you, as a benefit to work coach, do at transition points? Well, you want to stay in contact with a person either soon before or at the time they reach a key transition point so that you can check in with them, let them know if there's anything they need to do or anything you can help them with regarding reporting information or making sure the benefits change, etc. And avoid situations where people don't know what to do and they're prompted to quit work or cut back on their earnings unnecessarily. When you contact the person during a key transition point, you want to check their status, make sure you know where things stand with their earnings, their work incentive and benefit status, to re-explain the transition point to the person if they don't recall it, explain anything that they need to do, contact Social Security, etc., offer help if needed, and when appropriate, refer them to a benefit planner. It's always a good idea to let people know that they should contact you or the assigned benefit planner anytime they get a letter from Social Security or another agency that provides them with benefits. And then you or the benefit planner can help them understand the letter, not be unnecessarily anxious about it, help them take any action that may be needed. If you have regular contact with people, they're more likely to report changes to you, such as when their wages start or stop or the amount changes. So let's use these principles and go through 3 case studies, starting with Letitia. And I'll describe her situation, and then you want to take a couple minutes to identify possible transition points, and then we'll go through them together. So Letitia is 43 years old. She gets a $960 a month CDB, also known as DAC benefit. That's based on her deceased mother's work record. She gets Medicaid through the ADCare program, Aged and Disabled Care. She gets Medicare, and she gets QIMBY, Qualified Medicare Beneficiary Benefits, to help her with her Medicare costs. She has $950 in her checking account. She gets services from a CMH, and she desperately wants to keep Medicaid so that those services don't stop. She's not blind, she's not married, and she has no children. Her BPQI shows that she's used 5 trial work period months. She had a work review after the last time she worked. She has no overpayments on her record, and there don't seem to be any discrepancies in her BPQI. Now, she just accepted a job offer, working 25 hours a week at $12.50 an hour. That's an average of $1,353 a month gross wages. She pays for copays for psychotherapy and for psychiatric medications, pays $60 a month. And she has a job coach who's most likely going to help her on the job about 6 hours a week, which averages out to about 26 hours a month. So take a moment to determine what some key transition points might be for Letitia's benefits. And then we'll review them and go through when you should check with her about each and what kind of help you should offer her regarding each transition point. So please pause now, give this a little thought, and then restart the webinar. So one key transition point is Letitia is starting a new job. You should definitely check in with her, remind her to report her wages to Social Security. Secondly, with the earnings from her new job, her countable income is going to go over the limit for AdCare. She'll no longer be able to keep Medicaid through AdCare. That'll happen the first month she works. She needs to report her wages to DHHS and be prepared for the AdCare to stop. So you want to advise her to contact DHHS. She will also become ineligible for QIMBY and other Medicare savings programs because her earnings will be too high. So she needs to report her wages to DHHS, not only for AdCare, but also for QIMBY. And she'll lose eligibility for QIMBY. So you would need to let her know that she would have to start paying for some out-of-pocket Medicare expenses. But before she panics about possibly losing Medicaid, you want to let her know that she can apply for freedom to work, which of course has a much higher income limit than AdCare does. And given her income, she would pay a monthly premium of $58 a month with freedom to work. And because she needs to apply for freedom to work, you'd want to refer her to a benefit planner for help applying. And that's all going to be in the first month she works. Now, we noted that she's used 5 of her trial work period months. That means she has 4 left. The last one, if she starts work in August of 2019, would most likely be November of 2019. That's a good time to check in with her. Advise her to report her wages because now the amount she earns will become very relevant as she enters her EPE. Now, although her gross wages of $1,353 a month are above the SGA level, we noted that she's got some IRWs for medical costs she pays out of pocket and a subsidy for job coaching. And the amounts of the IRWs and the subsidy would most likely keep her countable income below SGA. This is something you need to refer to a benefit planner for, but you would have a role most likely in helping document possible IRWs and subsidy also. Now, because she'll be using up her trial work period, you'll also want to track when her EPE, her extended period of eligibility, will end, which will be 3 years after her trial work period ends. At that point, you want to talk about how if her earnings stay below SGA, she'll continue to receive her CDB benefit. But if her earnings go over SGA after the EPE, she would use her cessation month and grace period, which are only 3 consecutive months. And once she's used that up, if she does SGA, she would have her benefit actually terminate. It wouldn't just be suspended, but she could get the CDB back through expedited reinstatement if her wages drop below SGA within 5 years after the termination. Now, if there are any changes to her wages, she should contact you, report those changes to you, so you can see if they make a difference regarding her benefit or her work incentive status. All right, we'll move on to Gamon, who receives SSI. So Gamon is 22 years old. He's quite young. He gets the maximum SSI benefit, plus he gets the state SSI payment of $42 a quarter. And along with SSI, of course, he gets Medicaid. He shares an apartment with a friend. He pays half of all expenses, so he pays his fair share of food and shelter costs. He's not blind, he's not married, he has no children. His BPQI shows that he had gross wages in 2018 of $6,500 for the whole year and $1,600 in the first 3 months of 2019, and it's clear that he reported his earnings. So SSI reported earnings are appearing on the BPQI. He has no overpayments on his record. There don't seem to be any discrepancies on his BPQI. He has a checking account and a savings account, and combined, the balance of those two accounts is $1,900, so not that much below the $2,000 resource limit. He needs Medicaid to cover the services he gets from his CMH, and he's offered a full-time job in August, working 40 hours a week, earning $16 an hour. That averages $2,771 a month, gross wages. He'll be taking public transportation to work, won't be paying for any other work-related expenses. So take a moment to identify some key transition points for his benefits. So please pause the webinar now and then restart when you're ready. So because Gamon is starting a new job, that's always a transition point, and you want to remind him to report his wages to Social Security. Now his wages will be above the break-even point. He'll be earning way more than enough to reduce his SSI to 0, but his earnings will be below the 1619B threshold of $36,552 a year, which is a bit over $3,000 a month. So he should be eligible for 1619B. And you'll want to refer him to a benefit planner so they can verify his 1619B status with Social Security. And advise him to report his wages to DHHS and make sure that his state SSI payment stops when his SSI stops. Also, note that his countable resources were getting close to $2,000. So you'd want to advise him that he might want to make sure that some of his resources were in a form that doesn't count against the $2,000 limit, such as an ABLE account, so he doesn't exceed the resource limit. Now, This one's a little obscure. You might not have thought of this one, but since he's so young, only 22 years old, he could qualify for SSDI. He could get insured status by working with and acquiring only 6 work credits. That's all that's needed for insured status for SSDI for a person under age 24. And it appears that Gamon has already earned 5 work credits from the work he did in 2018 and so far in 2019. And he only needs about 1 more month of work until he has insured status for SSDI. But he won't qualify for SSDI unless and until his earnings drop below SGA. But you can let him know that he could qualify for SSDI if anything happened to his earnings, if they dropped below SGA or if he stopped work. And finally, Juanita, who receives both SSDI and SSI. She's a concurrent beneficiary. Juanita is 37 years old. She gets $550 a month SSDI and $164 a month from SSI, as well as $42 a quarter from state SSI payment. She gets Medicare, Medicaid, and she's enrolled in Quimby. She rents a room in her aunt's house. She pays the full cost of her food and shelter. She has no children. She's not married. She's not blind. But she's engaged to be married in June of 2020 to a fiance who's not disabled and who works part-time. Her BPQI shows that she had earnings recorded by the IRS of over $10,000 for 2017 and over $11,000 in 2018. But there's no indication that she reported her earnings for either SSDI or SSI on the BPQI. Her last work review was in 2016, before any of these newer earnings occurred. Juanita explains that she did work every month in both 2017 and 2018, but she stopped work in December of 2018. And the BPQI says that she hasn't used any trial work period months, despite her earnings. Juanita has an old SSI overpayment on her record that was incurred in 2016. She's having 10% of the SSI federal benefit rate withheld from her SSI to recover that overpayment. She has a checking account. The balance is only $40. Her fiance has a checking account, but she doesn't know how much is in it. Juanita needs Medicaid to continue services from her CMH. She's planning to start a new job in December, working 32 hours a week at $10.25 an hour. That's an average of $1,420 a month. She has no disability-related expenses, so no possible IRWs, but she'll get an average of 4 hours a week or 17 hours a month of job coaching. And in jobs she's had before, Juanita's always gotten some extra help from coworkers and supervisors, and she's usually worked more slowly than coworkers. So take a few moments to identify key transition points for Juanita. You can pause now and restart the webinar when you're ready. So the first issue to deal with is discrepancies in her BPQI. First off, the BPQI shows no trial work period months used, even though her earnings in 2017 and 2018 appeared to most likely be high enough for her to use trial work period months. So it's likely that her trial work period has all been used up, that she's used up all 9 months. However, it doesn't seem likely that she did SGA with the level of earnings she had in those 2 years. But with the earnings she received, it appears very likely that her SSI should have been reduced to 0, but she continued to receive it. This means she's going to have an additional SSI overpayment for 2017 and 2018, and she needs to be prepared for that. When she starts her job in December, of course, you want to advise her to report her wages to Social Security. Her countable income will go over the limit for Quimby, but in her case, it'll be below the limit for Slimby. So she'd switch from Quimby to Slimby, needs to report her wages to DHHS and make the transition from Quimby to Slimby. Now, she has possible subsidies. She doesn't have any IRWs because she's not paying for any disability-related expenses, but there's clearly a subsidy for job coaching since she'll be getting about 17 hours a month of job coaching, and because she may be getting additional extra help from coworkers or supervisors, and she may be working at a reduced rate of productivity since she has a history of working more slowly than coworkers. Because subsidies are involved, you want to refer to a benefit planner to develop and document the possible subsidies, most likely with your help. Now, it's not clear when her trial work period ended, but she needs to get a work review. So she has to request a work review from Social Security and report her earnings, of course. And it appears most likely that her trial work period ended sometime later in 2017. This means the end of her EPE would have been would be about 3 years later, near the end of 2020. So at that point, you'd want to check her earnings status, talk about the impact of earnings above or below SGA after the EPE ends. If she does SGA after the EPE and the grace period have ended, her benefit would terminate. Although if her countable wages later dropped below SGA within 5 years of termination, she could ask for expedited reinstatement. Now, her wages would be above the break-even point, would certainly be high enough to reduce her SSI to 0, but well below the 1619B threshold. So she should enter 1619B status. You want to refer to a benefit planner for help with that and make sure she reports her wages to DHHS again to make sure that her state SSI payment stops when her SSI payment does. If her wages change at all, you want her to report that to you. And the big issue for Juanita is her pending marriage. You'd most likely want to refer her to a benefit planner for help with this because it can be a little complicated. But when she gets married to a husband who's not disabled but who has income from part-time work and who has a bank account, though we're not sure how much is in it, deeming will most likely apply. That's where a portion of the spouse's income and resources count against the SSI of the spouse who receives SSI or 1619B. And in Juanita's case, her husband's income and possibly resources could cause her to lose 1619B eligibility. It could also cause her to lose eligibility for SlimB. But although she would be losing Medicaid that she receives through 1619B, she could consider freedom to work. which would enable her to get Medicaid after the 1619B eligibility had ended. Thank you very much for participating in this webinar.